Good day, everyone. This is Paula Balogun from the Global Financial Markets Trader. Today, I would like to share with you the psychology of trading and how to use psychology of trading in an active market session to actually profit through the any market that you're trading. So for the purpose of this video, I'm going to be using Trading View and probably MetaTrader. And I'm going to be looking at New Zealand Swiss. The first key thing that I want you to pay attention to is what is the trend. And if you are new, a trend is the direction in which the price is going. So as we can see, the price started from this side and descended all the way down. And during this descent, there are possibility for price to rise, and then obviously at the same time possibility for price to decline. So from this eye, which is going to be our first major reference eye, and I'll put that as a monthly. This is a monthly chart. I'll put that as a monthly location to this low. This is our most relevant highs and low for now. Okay, and as you can see, the price has managed to pierce through this low now all the way down there, and we've seen another up move that is leading to another decline in price. Okay, and the most relevant low that we might need is this one at the same time as well. So as you can see, all these areas of reference, they are picked from the higher time frame, and those will become our target location for take profits in case we are trading the New Zealand Swiss and then taking the direction to the downside. And so obviously at 0.5697, it will be important to take a bit of profit because price has stopped there before. And it's not about taking that profit at the exact price. You need to take the profit slightly above, maybe about 5 to 10 pips as a general rule of thumbs before price actually get there, take a bit of profit. And that's about 150 pips away. And then the next target will be about 563 pips away. Okay, so why is this chart important in understanding trading psychology? Let's look at weekly charts. And on this weekly chart of New Zealand Swiss, I will like you to pay attention to the first thing that we've talked about is the trend is down, okay, on the monthly. So we clearly understand monthly trend is down. Okay, on the weekly, for monthly trend to continue going down, the weekly should be cycling in the same direction, so the weekly will be the next chart that will have to be going down for the continuation in the monthly charts to continue to decline. And as we can see on this particular weekly chart, we have some equal levels of low over here and over there, and we have this key rejection the previous week, which shows us that as price is approaching here, okay, there are some buy orders that actually come in, which means under this equal low, there are buyers. All right. That is one key thing that I want you to understand about psychology of trading. Where are your competitors, or where are the market participants? First of all, weekly level, there are buyers. You can see our price goes back up. We come back to that area. There are buyers over there as well. So the psychology of buyers will be when they buy over here, the stops will be below over here. All right. price comes back to this area, buyers coming again, which means if you are anticipating that price will continue to go up, your stop is over here. And this new week now, what tends to happen is we've actually taken out those buyers and price continue to descend down, okay, which means some of their stops would have been triggered, all right, and then generate further downward pressure. Because if you are buying, what you tend to do to protect yourself is you're going to have a sell orders underneath to protect your account. If you don't, then this is how your account will get into big trouble, like diminish your trading capital or your funds, and then you'll be struggling to make that back. It happens to everybody thinking they can understand and know the direction in which the price is going. So this has happened and the stops has been taken, okay? And prices further decline down. So what are we looking for in this is to actually see how that gets to happen. Okay, so we'll be using some features like replay and back testing of what actually happened. So way before and before this move, um, on Thursday, which I was taking some trades in, and I was anticipating further decline, right? Which we will go into nitty-gritty of that at the same time as well. Is I know there's a reference low over here, okay? Price is bouncing away from that low. Again, price is bouncing away from that low, which is putting so many buyers underneath it. And that is the psychology of trading that need you to understand that underneath here on the daily chart, we can see clearly that the stops is going to be here, and those stops has been triggered, and then price has started to decline further, looking forward towards our target over here. All right, so way before that, what can we encounter um, before that? If we go quickly back to weekly charts, what I want us to understand is when price comes all the way down here, we tend to have a push all the way up, okay? And that push all the way up, in the way the trend works, you can see this particular trend moves from this side to this low, make another retracement, make a new low, another retracement that didn't take out that high, and then make this new low, all right? So that is a trending down. And in this case now, we have the retracement make a little bit of a higher low, and then we then make this new high. Because this new high managed to take out this high over here, we can equally say that we have a break of structure, okay? Break of structure ahead of this eye, all right? And that becomes key because noting where that break of structure starts can give us a clue of most probably the challenges that prices may encounter on the way going down. There are some legitimate order at the beginning of where the um, move starts. So one of the key origin where the move that break this particular structure started from was below here, okay? And then as we ascend, we have another retracement that started over here. So over here, we can see how price manage to convert this downward pressure and manage to take out those sellers that's affecting that downward pressure on this particular move here. So we're supposed to continue to go down right there, and then we have a failure, which means there's a huge force that take out this amount of large sellers that's supposed to push the price back down somewhere around there. So that is where our key orders are, and the key orders we see them on a weekly time frame. Okay, so that is just preparing us for potentially, if we find a reason for price to come back here, we can encounter some massive upsurge if those traders are still there. So this is not for you to just stick with, but this is just for you to be aware of the potentials that we can see along the line. All right, so you wouldn't be surprised by the time prices get in there and then it takes off significantly all the way back up. That is a possibility. So now you are narrowing down what kind of possibility that you can have, and you are being prepared ahead of time before price gets there. So if we go back to daily chart, all we can say is before we attain that particular level, we still have room for price to go all the way down there. So which is about 59 pips. All right. So that 59 pips, the closer you are taking your sell trade from this area, gives you more room for more profit. Okay. And then we're going to look into further psychology of what the traders are actually doing so that you can know which areas to plant your self. So the trend on weekly is down. The trend on monthly is down. So the cycle weekly, say weekly trend is down. Daily trend is down. Okay, so now you don't have no reason to go against all this major time frame. What you're going to be looking for is an opportunity to sell, and the opportunity to sell, you want it on a higher price, right? So let's quickly look at what then happened on 12 hours. I like to check 12 hours for the order delivery. Okay, so as we can see that we've seen severe bearish pressure from this high, low, lower high, lower low, lower high compared to that lower low, lower high, and continuously like that until we have this massive consolidation pattern. And then what intends to happen is we break that consolidation pattern. All right. And these are the key areas where I want us to pay attention to. Once we break on this 12-hour candle and we close below that area of weekly support and resistance, but we have a couple of retests on this 12-hour candle, and now that retest on that 12-hour candle, and then price is now descending. So the bearish order delivery on the key lowest time frame is down as well. So 12-hour is down, 12-hour bearish order delivery. So you don't want to trade against all this. So let's look at 4 hours now. Okay, so on this 4-hour time frame, we still haven't get to the nitty-gritty of what actually happened here, but obviously that is where we need to see how the psychology of traders actually work. So we know underneath here there are um, buyers, stop orders, and then that has been triggered. All right. And when we got here, we saw some other buyers that are pushing price up to go and retest the area where that was triggered. But our focus is on the first break right here. Okay, so and then what happened here is just a continuation of that bearish order delivery. So we have a bearish order delivery on 4-hour at the same time as well. From this high, price make that low, we retrace back down a little bit, we make a new low over there, we retrace back up a little bit, follow the process, we make a new low over there, retrace up a little bit, make a further significant low better than those other ones over there, about 55 pips, right? And then after that, we retrace a little bit at the same time as well, and then make another low over here. We retrace a little bit, and then we are making a new low. So what I want us to pay attention to is what is actually happening in terms of how the price is moving. Okay, so the price tends to be giving us a clue, and that clue we can follow it, say like 0 to 1, 1 to 2, and then we can say 2 to 3, and the 3 keeps extending, although we keep having, sorry, this we can look at all this as 3 continuation into 4, right? And then 4 to so we have 0 to 1, 1 to 2, 2 to 3, all the way down there, 3 to 4, and 4 to 5. So what this is telling us is we've done a 5 cycle of move, and after that 5 cycle of move, some are in a trend. You tend to have a much larger retracement. Okay, so if that is the case and we saw this retracement coming in, okay, and if the measurement is a measured move that is going to actually generate that particular retracement, what we can tend to see is price can return to previous areas or where the break occurs, and this location now becomes key. So what I want us to investigate is what actually happened where we have the first break. So if we go back to the 1 hour chart, you can see that when we have this first 1 hour break, okay, what tends to happen is price close below it, we add a little bit of a retest and price move further down. All right, already we know that there are traders who are buyers buying this particular price, and then we manage to take out their stops. And when we take out their stops, what we then do is we look to once the trigger of their stop occurred, we get to a point in time whereby they are completely out of the market, and then the price then shoots up. Another relief buying comes in. Okay, I'm taking advantage of lower prices in a responsive manner, just responding to these lower prices after the break. What usually tend to happen in the market structure is simple. So there will be stop over here. Once the stop is taken out, there wouldn't be any more sellers. So some buyers will look at the price to be cheap, and they are looking for opportune moment to take advantage of these cheap prices, while there are no more sellers that want to sell lower prices and then push price back up. But meanwhile, while this price is being pushed back up, we've had a barrier, a big key level of barrier, which is this weekly level, which will be the area whereby traders will be looking to at least take profits. Okay, so I'm using this key currency because it can literally slow you down, and that's about 27 pips worth of retracement back up there. Okay, and that is good money if you are taking a responsive buying opportunity. Obviously you can take advantage of that 27 pips. Well, what happened after the break is what I want us to investigate. So if we go to the nitty-gritty of that, using this area, there are key things that I want to point out on the lower time frame so that you can see the actual psychology of how we um, we get to where we are. So we knew quite fully well that there is a support over here, which we've been talking about. This is where all the buyers and their stop losses are. And the one key thing that happened is when price got there, all right, buyers coming. Okay, when buyers come in, the target of that buyers will be this high, and this is where you need to pay attention to, because we've come here before, price come back there again, and then when we get to this low, we will then be targeting this area. That okay, if we buy in a short-term manner and we don't know what's going to happen, okay, this key levels becomes the buyers area of target to take profit. Okay, so we look at it as an area of equal highs or lows. All right, so price has made a couple of rejection in that area. So once the buyers that keep buying this area comes over here, some of them will be taking profit. Okay, why? Because this has become an area of previous rejection. So taking profit over there will be key. Then what they intend to happen is, because everybody is taking profit over here, okay, and after that the price will move down. Let's say, for example, over here the price is rejected, over there the price is rejected. When the price is rejected and move down, what is happening is the sellers are coming in to short the price. Okay, and then we move back to it again. The sellers come in, they descend upon the price again. So those sellers have their stop orders above here. Okay, and then over here again, the sellers coming to sell. They still have their stop order over there. So your plan is to be watching where they are. All right. So we know sellers are here, we know sellers are here, we know sellers are here, and their stops is here, their stop is here, their stop is definitely over there. But any opportunity to take out that stop in a downtrending market, as we've explained before, definitely that will be the most favorable area to target those sellers. All right, so you are targeting the sellers, which means you're targeting the psychology at the back of what the traders are doing based on what the price is showing you. The price is showing you that they're going to sell over there, show you that they're going to sell over there, show you that they're going to sell over there. All right, and their stop is over here. So to take them out of the market, we need to at least trade above where they are. And once we trade above where they are, what will happen is there will be a lot of confusion in the market. These sellers over here, we've traded above it. We've caused them to be confused in a way, and then now we are eating them at a very, very challenging spot, because what they're doing is not smart enough, because they're leaving their footprints. All right, so once they leave their footprints, that is what you want to capitalize on, and that is where the key psychology of traders come in. Okay, because now you are able to see where they are, because they are selling at a particular area, they are doing that at a particular area, and those are weaker hands. You know, a huge move does not respect where the weaker hands are. A huge move will never respect where the weaker hands are. So weaker hands are showing their print, they're showing their print, they're showing their print by selling in the same particular area, and now you go against them. And when price goes against them, they are shocked, they are confused, and they are equally out of the market, either because they've lost money, and either because now their confidence is shaking. Meanwhile, the original trend, as we've spoken, as we've been discussing earlier, we still have to kick back in. Monthly is down, weekly is down, daily trend is down. So ever as bearish order delivery is there, and then now the psychology has been played upon, and we have this massive rejection of the highs. That is the key level, where they are, and rejecting where they are, you know what I mean, is the key level. And then we have this massive sell-off that occur over here now, and then it's that key particular level, retrace a little bit, and then all the way down in a good slow trending manner. All right, so after that has happened, look at this huge definitive move. All right, it's there's nothing that make noise in this particular move here. It is a decisive, impulsive move in the direction of the major trend. All right, and that is the key move that you want to capitalize on. How do you capitalize on it? By understanding what the traders are doing before. And okay, let's go back to it again. Look at this area. So we have this area at the same time as well. Price has come back there. price comes back to this level, all right, and then just note it down again. When price has exhibited the sell-off below the key weekly levels, we found another price move up back to it, retesting the previously break the previous area where we've broken, but price did the same thing, targets the area where the stops are again. All right, wait for that. When you can wait for that, then you can kill fear of missing out. Once that area is breached the first time, it's telling us that, okay, now we scared away some people over here. We find some selling forces coming in. It's like they can't wait. And then we had another push up to actually clear them out. So what what we've done is we've taken these sellers out, right, in that area, key levels. Again, wait to see this another key level that's formed, and we flush above it again to um, do the trading mindset game to confuse people that, okay, maybe we want to be going back up because of this particular move. But the major trend remains down. The key other thing that's occurring over here is these are psychological levels of 500 of 5,900, 0.5,900 psychological level of the OOs of 0.5900. And what then tends to happen is that psychological level has been broken. As you can see, let's look for the exact level over here, 5,900. All right, so that's the psychological level, psych level. So we've stopping at 5,900. We actually break through 5,900 and price goes back there. All right. So where the challenge is for most traders is that this is a key level, and then expect there to be a little bit of slowing down reaction for price to turn. Not that price is just going to turn. You know the level, then you wait for the reaction. So what kind of reaction are we getting when we get here? So you have to leave a little bit of room for you to actually see what will then happen. All right. So checking this area, 5,900 price trade above it. Okay. Come back to it to retest it, trade back into previous areas of equal highs or lows. Price come back to it to use it as potential support. Trade back above it to flush out again those areas with this massive key rejection candle, and then let's now do a bit of a replay for us to see exactly what happened. So the first thing is let's do a replay and analyze what is going on over here. Okay, as you can see, this is the first break of the weekly area. We'll be patient because we didn't just break the weekly area, but we hit the psychological level. All right, so now we've tested this particular area, again making it a significant level of retest. We want to see whether we're going to break. Oh, we didn't break above it, so we break through psychological level, and then we expect price to continue to move down, and that's what's going on over here. So price keeps moving down, and a little bit of buying it. We keep having the significant pressure downwards, more pressure downwards. Oh, look at this massive push up. What is going on here? We are not seeing that good decline. Is showing us that there are buyers coming in. And that's another buyer coming. Okay, so it's giving us a little bit of pattern, like descending um, channel pattern or descending triangle pattern, which eventually that will become a huge bullish rejection of the lows, price did not descend the way that it descended over there. The more we descend, we are finding buyers. The more we descend, we are finding buyers, and then we change around. We then change around, and then we are pushing up back to psychological level. We break this particular trend of the first break of those key levels, pushing back to psychological level, getting into the psychological level and rejecting. But the key is, because we have this eye, we want to see if we're going to be able to take out this eye, all right? Because we know that is the eye that gives us the new lower low. And obviously we are back into it now, and we've, oh, look at that massive breakdown that has shown us that the psychological level and the rejection is taking place, and 5 minutes break of that. Let me see if I can, what is happening over here is we hit the level, we flush the level, I won't flush the level, we break below psychological levels over here already, then we'll retest the level, and then we start the flush down, right? So the major entry will be breaking the psychological number. First is we trade above the psychological number, we retest the psychological number, then we start to go up higher. All right, once we start to go up higher, what we expect is probably a price will break and continue to go into this. Is a possibility, or we will reject this area because it's an area of equal highs or low. But before we reject it, we need to take out some of the stops that were over here, so that we can use that stop as an opportunity for reversal and lead to confusing traders who are especially thinking of oh, because we've seen this move up higher, we want to continue. Having done, say, potentially we break, all right, then we retest, okay? And in break and retest, you can have a break and retest, all right, or you can have a crack of the weekly support area and then reversal back up. But obviously, these are cautious areas. These are areas where you want to see that, are we going to have the crack of the weekly area and then reverse back up, which means when price got here, we expect that there is a possibility for continuation. If we didn't see the possibility for continuation, and this is where the trader's mind kicking, the execution mind kicking, what are we going to see? Are we going to see potential possibility for this? This is a potential break, okay? Now we've broken, and then now we are doing a retest. Are we going to have a break and retest, or we going to have a break and retest and continuation to the downside, which is this? Or we're going to have a potential possibility for this break of the weekly level, all right, and then we will snap back above it, okay, which means when price got to this side, we expect possibly a potential retest of this, okay, and then we trade back up higher, all right, and we can't really enter this trade until we now retest this area again, and then we use that support to enter back up. Okay, so those are key things that I want you to pay attention to. But in the first one, we can find a possibility of saying, okay, we know our key area, which is this. That same key area is the area that we are rejecting. Now that we've rejected it and we break through psychological number, any trade that tends to now start to break below here becomes our sell opportunity, and the sell opportunity kick in, and we have potential short opportunity that's arrived on that particular candle. Stops can be, say, about that 10 pip in that particular area. So the key is not jumping in, but seeing the reaction that tends to happen at the back of the key levels that we want to say price action. All right, so we continue to go down now, and now we know that this low becomes one key level for us. Is it that important? Well, it might slightly important. What we want to see is a bearish continuation of that monthly and weekly and 12 hours bearish order delivery. So price continues to go back down. Our key area remains that particular low. And then we have a break below the low as anticipated. All right, so this low area now becomes a key level of inflection point. Okay, price is testing it. What we want to see is, are we going to now break above it? Potential possibility for retest and go back to these levels. So our shorts start from this high. So anything around there is a good area for us to anticipate a short, especially if we've done the psychology thing again, which means this is a level that we've seen. And if we break it, yeah, we break it, we do the same taking off of sweeping down the sweeping off these the buyers trying to go up, right, on that weak rejection, and then we're coming back down to this low. So we have another possibility for a trade of 22 pips right there, following the same strategy. All right, we come back to this low, we look slightly below it again, price goes back to this level, and we know that anything above closer to here, it's a good area. So now our mindset is becoming the mindset of the sellers that are selling from here, in the sense that we can get caught up in that psychology, thinking, okay, all the time they are selling from here, if price goes back there we can sell. Now we find the area where they're selling, price goes back there, we can sell, and that is where the trap is. Okay, that is where the trap is. So it's either you're now taking yourself through this level, or you are waiting for that level to be broken for price to come over here, which is much more patient in a way, and I give a much more better trade opportunity. So you can always believe that there's a reason for you to wait. Levels have been created, right? If you get trapped into this level, then what tends to happen is price may then shock you, right, and then go above it, right, because it is now distinct and clear for everybody to see. And when it goes above it, then reverse strongly in the direction of the trend. And this is where the key psychology of trader plays, because what you are seeing is, oh, they're selling from there, let me sell. Oh, they sell from there, let me sell. They sell from there on areas of equal highs or lows. But what tends to happen over there is they are weekends that are taking advantage of price action in the same level. So what this smart money concept we do is, okay, let me take advantage of them because I know they are there. So you know that they are here now. What you want to do is see whether you can have a potential move that will go above them, right, and start to reject all the way back down in the direction of the trend. Okay, and that is what I wanted to discuss in terms of the psychology of traders and what you should be expecting, and how that can definitely improve your trading experience, can definitely lead you out of fear of missing out, and give you a much more stronger definition at the back of your trading, because now you are just playing against the other traders. All right, and that is what is key. That is what the smaller percentage of winning traders does, because they don't go with the crowd. All right, so once the crowd starts to show their footprint or whatever they are doing, they tend to have patience, and that's how you develop that patience and mindset. Okay, and that is key. So now we've come back down there again. You'll be saying to yourself that, I mean, I don't want to miss the opportunity. Let me short. You can do that, but is it a quality trade? All right. So you are in the same direction or in the same position as the as a how do I put it? As a crowd. This is a crowd because you can see they can't really push price further down. That is what the crowd does. They are jumping in for a quick shave off and making a quick profit. And if you measure it over here, a profit of 23 pips was made. Okay, over here again, a profit of that was a good one because we trade below the low. 29 pips was made. Over here again, we couldn't go further than 17 pips. Okay, and now we are breaking above, going into the key levels where we find the first rejection, which is somewhere over here. Now that we've done that, all the stops of these traders that are taking sell position over there are becoming more nervous because price went over there, probably kick them out, and then we shoot higher into further key levels, which we haven't attained the particular levels where we want to attain. But what we've seen is we sweep above, all right, and price is coming back down to another levels of equal highs or lows over there. Okay, and what we want to see is a potential possibility of either we shoot back above here and then find a rejection, which will be good for us because of the orders that break that potential sell-off. And if we don't, we've seen a levels over here that has been cleared off now, okay? And the key thing that's happening is we are now having these levels of equal low. Now we've just broken that levels of equal low, and we can expect potential possibility for either continuation, all right, to the downside, or are we just sweeping and now the continuation has happened after the sweep again? So this is a level of back testing that I want you to be imagining, that I want you to be thinking of, and potentially taking advantage of. And the key thing is for us to now break this low right here, for us to say that, okay, the trend to the downside is continuing. Okay, right. So look at this. Now we've sweep above here. And that is the reason why I was talking about that patient. Now we've sweep above there, okay, which means we've taken out this selling opportunity. My key area is this area at the same time as well. But because we have a sweep, we can then have of the particular area, which means your trade opportunity or your trade want to be the main essence of the market is to facilitate trade, and you can't tend to forget that. And what does facilitating trade means? It means if you want to be a seller, you have to sell at the highest point. All right, so let them give you that highest level, and the highest point over here now is this area of equal highs or lows. So if you want to see a potential good trade, is to target above it, all right, in line with the trend. Okay, so what we've seen over here is we've seen a potential possibility of equal lows over here now, which is now key. So they are here weaker, and they are here weaker, and they are here weaker, and but our key levels is up here, and then we tap above those weaker and again. And what we've done is we've facilitated the real definition of the market or of trade by selling the highest point, which requires patience. For price to go to that particular highest point requires patience. And then now we want to buy the lowest low. So these lows are there, they don't have any sense. That is if we're trading if the high time frame is in a it's in a uptrend, then we can be targeting this key low. So we've swept below the low now. The key thing is see how we trade above this area of equal highs or lows, whether we're going to be rejecting it or we're going to sweep above it again as usual, and then price will then continue downward. So the key is to have that patience. But one area where you're going to have patience is see the sweep above here. Another area where you're going to have patience is see the sweep below here. Okay. So the market gives you the let the trap be set. These are trap areas, because we're seeing multiple tests of that particular area and no key fundamental institutional order flow will be tracking the same areas. We want to break it for us to take advantage of what is below the low. So we want to break this area now for us to come and take advantage of the orders that are below here. But for us to see the break below here, we might at the same time say to ourselves that coming Monday, we can then see a push to this order block that gives us a new low over here, right? Okay, so in looking for that, what we've seen is a price does a lot of movement back closer to there. We didn't go to where that order originated from, as I've discussed in the earliest part of this session. And then although make a new low. So all the moves from here, right, that did this, right, is coming from this particular move. Okay, so, and if we manage to come back to this area again, that's a golden opportunity for us in the new week to take advantage of the sell opportunity that is currently being pushed around. And what would then have happened is that we would have taken out this particular high, right? By waiting patiently for this particular eye to be taken out is one key strategy. Come here and we find rejection, and then we continue to the downside as the market progresses. So our key opportunity for shorts that will be making sense will be anything from this area, okay? And we can take advantage of price going further down. And that is the end of the trading session. We still managed to make a new low. So coming into Monday now, we'll be looking for continuation to the downside, okay? And in our continuation to the downside, what are the key levels coming up? In continuation to the downside, what are they playing at? All right, so well, the one key thing that they are playing at is they are here with a lot of noise because they are there randomly. Okay, so we can expect for price to come and shave off this high, right, and into this key level over here. So these are areas of the equal highs and lows again, which is where they are, into this key sell-off that occur in price over here. So this will be a lower time frame origin. All right. And then apart from that, this will give you a minimum stop loss, because your stop loss now is let me move this one over here. Your stop loss is you are looking for a particular trade that will potentially give us this move, and you want to take that trade in a way whereby you are not thinking for the market, but you want to take it in a strategic manner. All right, so what you want to target is you want to target let's see, you want to target 71 pips, but in a much more meaningful fashion. So if we have a break above here, that's 4 pips. If that is good for you for 71 pips, then there's nothing wrong in executing this trade 4 pips. If it goes against you, all right, you have another levels that you are looking at. And the other levels that you are looking at is way right up on the chart. So when we break these areas of equal lows and highs, we have this particular uptrust, all right? So this particular uptrust, let's see where it's actually coming from. Okay, so you can see there's a block that wanted to continue to go back up here above, was forcefully rejected and make a new low, and then we retested it in this area to come and make this current newer low below here. Okay, so the market has currently generated new low, and possibility for that to continue is high because it's in line with direction with the trend. We can have a gap down, and then you'll be thinking you've missed a trade, but this level is still there. That's one area to short. The next area to short is looking at areas of role reversal. So over here we have this low that's bouncing price back up, this low that's bouncing price back up. We got back there again, we got a bounce back up, but it couldn't push up higher, and then we trade down to this level. We have a huge multiple shoot back up, so price comes back to that same area of role reversal, comes back down to that area of role reversal. So that area of role reversal becomes key level for us, and we can find a multiple shave back into that area. So when we look at this area, it's not just role reversal alone. Then it becomes area of equal highs or lows right here at the same time as well. So the deeper we can have the move back in, the better for us. So over here, we have equal highs or low. So this area becomes much more significant because it's got two confluences of role reversal and equal highs or low. So let me put it there. Say potential possibility for plus role reversal. So you have two confluences right there. So if price decide to go back above it and shave this area, because you know there are stops over there, then you can have a potential possibility for another trade opportunity. So now we are looking for another short opportunity. And the way to approach this particular short opportunity is to let price get there. And how do you do that? What you want to do is you want to set an alarm when price gets there for you to now see reaction. The alert is not to take the trade, but the alert is to alert you to what is possibly going to happen over there, like the same thing that we discussed over here. So in this area, this is an area where decision needs to be made, and you want to know what your risk is. The first one, I'll set an alert there. All right. And then over here now again, you want to set your alert here to see exactly what will happen. And reaction is you can have price hit here and you are looking for that particular inflection point where it's gonna turn. Okay. Key thing is like here. You can have price hit here, and then you are looking for either continuation to the upside, which means you see one price to trade above to retest and continue, or you want price to hit here, shave off all those areas of equal highs or low, find rejection, okay, and then continue to sell back down. All right, so the 5,900 is still within range, and this is another trade opportunity that will gives you better reward than 71 pips. So this gives us 86 pips. Okay, so that's a trade opportunity right there. And the next trade opportunity is to actually see a price coming back to these key levels. And then we have a short opportunity somewhere around there, or which is the last one that I did over there, which is this one right here. And then that will offer us a much more better risk to reward of 90 pips. Okay. And those are the opportunities where you can put your alerts on. And then you can see the first stop loss is about 4 pips. Over here, we are looking at another 7 pips, and over here, 10 pips stop loss. And it's all about playing the psychology of what other traders are going to be doing. Okay, so those are my 3 levels.